Hello, everyone, and welcome back from the holidays. I'm excited to get back to business as we launch into our first weekend market analysis series for the new year. In this video, we will be diving into the dynamics of the gold market and exploring its potential for the upcoming week. To kick things off, gold ended last year with a massive move, breaking all record highs, hitting at the 2007-90 level before finally closing the year around the 2624, which was a 28% annual gain. In fact, this marks one of the most significant movements in gold's history, setting a strong tone for 2025. As we enter the new year, gold is showing signs of recovery amidst the ongoing political and economic uncertainties, persistent inflation, and physical instability. Not to mention the looming questions of how Donald Trump's potential actions could impact the market. In fact, all these factors herein are creating a solid foundation for further gains in the gold market. Just last Friday, Tom Balkin from the Federal Reserve was talking about how they have eased interest rate down to between 4.25 and 4.5% in the year 2024, which helped move inflation towards the 2% target while keeping unemployment significantly low. He also went on to downplay concerns about Trump's tariff plans, suggesting that they wouldn't have a direct impact on prices given the broader economic landscape. Well, for me, this statement could be interpreted as the Fed's trying to ease pressure on the US dollar, which may benefit gold in the short term. However, when we take a closer look at the weekly chart, as you can see on your screen right now, you would agree with me that there is some work to do before we can really say we are out of the woods. As you will see here, we can see that gold is still in the midst of a corrective phase, as you will see, since price tested that all-time record high, price has been going through a consolidation phase. Now, will price drop from this area or rise again and push further to the upside? And in fact, we have multiple ascending trend lines here, and key levels around these ascending trend lines remains critical, and a violation of this could lead to a short-term pullback. So, as market participants await next week's economic data, including the highly anticipated non-farm payroll reports, we could see increased volatility in the coming week. In this video, we will be analyzing structural details that will help us understand the behavioral patterns of market participants and use this to strategically position ourselves for the next move. Before we proceed, please note that this video is for educational purposes only and not financial advice. Always consult with a professional financial advisor before making any investment decisions. With that said, let's jump right into the chart and see what's in store for us this week. So, my first point of contact for this week is going to be on the daily time frame, where I have been able to take into account the character of price action from the major part of last year, maybe from around February, March, April area. And of course, you will see here that the market is obviously bullish. And to further emphasize this, I was able to connect the series of higher lows as you will see here, giving us the major ascending trend line here. And of course, I have the second ascending trend line serving as the primary trend line on the daily time frame. And of course, you know how we use our ascending trend lines in this community. As long as price remains above this ascending trend line, we shall continue to look out for patterns and structures that support buying ideas. Now, if we take a closer look, that is, if we zoom further into the last 3 to 4 months, you will see that price has been going through a consolidation phase. Now, this was the highest point price action has ever been, that is the 2790 level, and ever since price action tested that area, we can see that buyers have struggled to find another new high. But there is one thing here that makes this whole structure a significant one to look at. Now, one thing I was able to identify here in the last 3 to 4 months is that despite the selling pressure from this all-time record high, this zone between the 2540 and the 2605 has always been serving as a buying niche, and every attempt by sellers to break through has always failed, giving us a clue into how market participants have deemed the gold cheap enough to buy from this particular area. And to further buttress the significance of this zone, you will see that it also lines up with this ascending trend line we have here. Now, the question going into the new week is whether this ascending trend line will still remain a platform that could push price higher, breaking out of this descending trend line to give us more opportunities to maximize the potential of this bullish move. And if that is not going to be the case, then if price will break down this demand zone and trend line, it could incite selling ideas. Now, to make things a little bit easier for us to navigate through this current structure, we have our key level for next week identified along the $2,605 zone, making it a platform that will decide whether we will be holding on to the bullish idea or getting ready to sell. And you know how we use our key levels in this community. As long as price remains above the key level, we will continue to look out for buying ideas, and we will not consider selling unless this key level is breached, broken to the downside, before considering selling ideas. And look at how beautifully it lines up with that ascending trend line. Now, with this information we've gathered here, you would agree with me that we are at a crucial juncture. So, what we are going to be doing next is to identify a structural detail for next week's trading session. But before we go into the 4 hours time frame for this, we will need to take a quick look at the economic calendar, where we shall be knowing what major events market participants will be looking forward to next week. And of course, you know, by monitoring the economic calendar, we tend to identify potential correlations between key economic releases and specific technical patterns on the chart. Now, based on these assets we are looking at for this week, we will be focusing on high impactful economic event from the United States. Now, for next week, the first impactful event will not be coming until Tuesday, January 7th, and that is the ISM Services PMI, a data that measures the performance and expectations of the service sector in the United States. Then on Wednesday, January 8th, we are looking at the ADP employment change, a monthly labor oriented data that provides the number of new jobs added in the US private sector. Then on that same day, we shall be looking forward to the publication of the FOMC meeting minutes, which is the record of the discussions and decisions made by the Fed during their last month meeting, which will be providing an insight into the Fed's view on the economy and future monetary policy. So, this is another event we want to be looking forward to next week. Then on Friday, January 10th, and even before Friday, on Thursday, there is a public holiday in the United States. President Jim Carter, who died at the age of 100. So that is not stated here, but we want to take that down to as well, as it will influence the sentiment in the market on that day, as the US market may be closed for that particular day. So on Friday, January 10th, we are looking forward to labor oriented data. We have the average hourly earnings, which measures the change in the pay for workers in the United States. We also have the almighty non farm payroll, a key economic indicator that shows how many jobs were added or lost in the US economy in the previous month. Then finally, on Friday, we will be looking at the publication from the University of Michigan, which is the Consumer Sentiment Index, a report that measures how optimistic or pessimistic consumers feel about the US economy's future. So these are the high impactful event we are looking forward to. So it's appropriate that we keep down the timing of this event on our calendar. The anticipation of this event definitely has a major influence on the market, and we shall be seeing this reflection on the chart as price action. So, talking about price action, we shall scale down into the 4 hours time frame. So right here on the 4 hours time frame, this is what I was able to come up with. So our key level still remains around the, okay, it's around the 2605. I placed it on the 4 hours on the daily time frame. Sorry. So let me just readjust this quickly. So we have it up 2605, right? And one thing I was able to get here after taking into account the character of price action in the last 3 weeks is that price has been finding lower highs, and this has resulted in this beautiful descending trend line we have here. And one interesting thing happened last week Wednesday, where we saw price action break out of that structure, as you will see here. And from a theoretical perspective, when price breaks out of a key structure like this, we expect that some point in time, price is likely going to come back, retest the structure in an attempt to continue that uptrend scenario. Now, will this be the case for next week? And if it's going to be the case, where and which area are we going to be looking out for buying ideas? So, what I did here was to take into consideration this impulsive move that broke out of that structure, then project where the retracement phase will end before the next wave of bullish momentum will happen. So to do this appropriately, we need our Fibonacci retracement tool, running it through the previous impulse leg and aim at our golden zone area, which is between the 50 and the 78.6%. And if you do that correctly, you will see that we have a buy window between the 2611 and the 2631 area, which obviously is still around both this descending trend line and this ascending trend line I was able to spot here. So you'll see it's a very important confluence. So we shall wait to see how the market is going to react to that structure. So what I will be looking out for here is a potential reversal setup. It could be a double bottom structure, inverse head and shoulder pattern, falling wedge, and of course I want to see price breakout retest the neckline of the structure to continue the uptrend move. However, If price does not do this and instead goes ahead to break down the key level and the trend lines, a retest of structure will be a good confirmation to join the decline. So this is what I will be looking forward to next week. Then one more thing before I end this video, it is not all the time that price may come back into this structure before continuing the uptrend move. And in fact, considering that we have a structure around the 2635, the emergence of buy pressure at the structure on Monday could also incite buying ideas. But trust me, I will be with you in the comment section of this video on Monday morning after monitoring price action for the first 8 to 10 hours to give you an update on what I think will happen around this particular area. So there you have it, my in-depth look at the XAUUSD for the week ahead. I hope this video helped with your independent trading decision, and if it did, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. B- Bye.